Hello, children. Let me spit out my gum. It'd be rude if I didn't. Let's talk about how we're going to make $1 million this month. Just kidding. We're not going to make $1 million this month. But I want to do a trade recap. I'm sure the title is something like, this model is going to make me $30,000 this month. That is the goal, is a $30,000 profit goal, including the combine profits. We're trading on 3 50K Top Step accounts. We're not going to talk about the last batch of combines. We're not going to talk about those ones. I didn't take any trades last week just because price action was god-awful. But essentially this week, I'm looking to pass the combines, and I'm looking to hit 7K in profit post-combine over the month of June and take my first 5-figure payout. If you're new to the channel, I started trading in February, March of this year. April, I took, or was it May? It was kind of like a combination of April and May. I made about $2,000 on Fundids, and now I'm just looking to scale essentially. So I'm going to take you over the course of this journey. Again, the goal this month is $30,000 in total profit, secure a 5-figure payout. But without any further dilly-dally, let's talk about what I saw going into market open today. I do have executions on the screen. I took 2 trades today, won both of them, and here's the quick performance stats. It says I have a 100% win rate, but it literally just started. So let's get back into the charts. So the first thing that, let me get rid of all this up here. The first thing that I took note of today was our range. So I used our fib retracement tool to calculate our range. And coming into the market, we were actually at a discount, which was nice because I had a long bias for 2 reasons. One was that we were in discount, but 2 is because if we look at this 4-hour imbalance, dude, I'm going to blow a gasket. Can I get my rectangle tool, please? If we look at this 4-hour imbalance, we've been really respectful of this range. We tapped it twice and immediately, or excuse me, 3-4 times on ES. And each time we had a really bullish reaction to this imbalance. So what I expected to see today was price coming down into this range here and then seeing expansion to the upside in towards this 4-hour imbalance here. We had something similar on NASDAQ, but it was a little bit further down than it was on ES. But still, we tapped into it a handful of times, and each time we had a bullish reaction to it. So that was cue number 1 that I think we're going to be bullish for today. As far as news goes, we had ICM, which, as I've talked about before on the channel, doesn't really impact NASDAQ, ES, or the Dow. I just wanted to be done trading before 12. This news actually wasn't as impactful as I thought it would be, but I wanted to be done trading before 12 today. So dropping down into lower time frames. Today was picture perfect entry as far as my model goes. This is the closest thing I have to a forever model. So let me get rid of this equilibrium here, but actually no, I'll keep equilibrium for now. We took the first trade on NASDAQ, first trade on ES, second trade on NASDAQ. Literally was picture perfect. We manipulated into that range that I discussed. We actually didn't hit the 4-hour fair value gap, but we manipulated into discount, creating an SMT, and then we had to move up, which is what I ended up entering on. We look on the 15-minute on ES, these 445 lows. We end up taking those out at the macro open, and this is, you got your textbooks out, you got your notebooks. This is textbook macro manipulation. If we look at the opening range, right, let's look at 8 o'clock. Let's look, okay, boom, we have this candle, this candle, this candle, and this candle. This makes up our opening range, right? So this is also kind of, do I have a draw on liquidity template? No, let me type, hold on really quick. We're going to go buy side liquidity. I want to know how, right. Yeah, good boy. Who's a good boy? Who's a good boy? Buy side liquidity. And then let's look right down here. Yes, who's a good boy? Bink. Bang. Bang. And then we're going to have sell side liquidity. And we're going to save this as sell side liquidity. So this is also similar to the ICT silver bullet strategy, which is something that I used a little bit more when I was newer, but again, I kind of just been taking parts from ICT and kind of morphing it into my own. I guess this was another thing that I looked at too, was highs and lows for Asia session, but it wasn't really super important in today's trade. But let's look at our opening range, right? We look at the opening range for New York session. I'll draw a vertical candle as well. We open at 8 a.m., right? And then if you look at these 4 candles, this is what creates our opening range. It's the first macro of New York session. We create this sell side liquidity, right, on the 1 hour or on the 15 minute, right? The sell side liquidity finishes actually here technically. But anyways, we immediately take out this liquidity, putting in an SMT, right? So again, we take out the sell side liquidity. What is the purpose of liquidity, class? Why do we have liquidity? Why is liquidity important? Because the market movers can't just move the market. They have to have their orders filled. So what I anticipated was price was going to manipulate down into our range, and then those orders were going to get filled, and then price was going to go to the upside. That was my bias going into the day, and it just played out. So we took out sell side liquidity from our opening range. I'll just bring this a little bit closer. So we take out our motherfucker. I'm going to get demonetized now because Top Step X is bugging, bro. I'm going to tweak. I'm going to crash out. Why can't I look at my brains? Dude, this is NASDAQ's revenge on me, bro. NASDAQ wants to see me tweak, or ES wants to see me tweak. Okay, anyways. So we manipulate down into our opening range sell side liquidity. We take out this liquidity and immediately displace to the upside through this 1 minute SIBI, which this was my first entry of the day. We inversed this fair value gap. I waited for retracement into consequent encroachment, targeting a 1 to 1.5. Now, this is the reason why I actually didn't just take one trade today. Actually, this isn't entirely accurate. I think I had my stops here and I was targeting. Oh no, this isn't right. Hold on. This isn't verbatim how the trade looked, but I have the video recorded. I have no reason to lie to you guys. You guys can see my executions here. We bought at this candle here and we sold at this candle. I think it looked something more like this for all intensive purposes. I would have actually been pretty close to this because I only profited 750 instead of 1500. But the reason why I ended up closing this position early is because we put in another SMT, which was a bearish SMT. It didn't end up holding, as you can see by price action, just went up. But I've seen this play out enough times to know this isn't going to be great for me. So if we look at, let's just get rid of this for now. Look at these highs here at 857. We take out those highs. And then, again, 857 highs. What does NASDAQ fail to do? NASDAQ fails to do so. And in real time also, this was, I think, a pretty reasonable spot to close my position early, because what this looked like on the 1 minute when I was watching this trade happen, it was a super strong move up, and it literally just missed my take profit. And then we go, and we just drop right back down. So what I anticipated to happen was if I moved my stops to break even, because at this point I had just de-risked. Maybe I'd entered closer to here. Take profit up here. Yeah, this looks a bit more like what I would have taken. Yeah, because I think my stops were right below this candle here that created the move up. But anyways, like it literally just missed my take profit. And I'm like, well, if I move stops to break even here and this SMT holds, it's just going to run to my break even. So I might as well just take profit and see how we react to this SMT. Literally 2 minutes later, my take profit would have gotten hit. So I just hopped in another long on NASDAQ. This isn't super disciplined, but I think it was pretty reasonable because an SMT, the way that I look at an SMT is it's a manipulation move to take a draw on liquidity. So where's the draw on liquidity for the day? So these highs up here, right? And if you look, we put in this SMT and then price rallies to these highs, starts to consolidate and push higher, right? So if I was taking this trade and these weren't combines, my entry would have looked something more like this. I would have used a little bit more risk. I would have probably put my stops at the lows that created the SMTs, and I would have targeted these highs. But there's no reason for me to target a 3R when I can just risk 1,000 and hit 1,500 for my max daily allowed limit, which is a reason I actually failed the combines the previous week, because I actually made too much money is literally why I failed. And then I crashed out, but it's not the point. Anyways, that was the first trade. Second trade was really simple. We had a 2-minute fair value gap that we inversed on NASDAQ. I took a pretty low risk trade. And actually, this was really fun to watch in person. Actually, it wasn't a low risk trade, but it felt low risk just because of how price was reacting. But yeah, we have this 2-minute fair value gap that we inverse. I wait for a little bit of retracement, enter long, and I think I put two contracts in, I think. 5 contracts twice. I think I miscalculated the lot size, but whatever. Yeah, it literally took 3 minutes total for this play to cash. So again, that's basically it for the day. Apologies if the explanation wasn't super great. Essentially, what is the strategy that's going to make me $10,000 this month? It's a clear bias for the day. Do I want price to go higher or price to go lower? Then I wait for a manipulation towards some draw on liquidity, putting in an SMT. And then I wait to see a 1-minute fair value gap get inversed. And then I just follow price to the draw on liquidity that the SMT was put in for. And that's basically it, right? For me, it's all about just knowing where the draws on liquidity are and knowing what the market likes to do before the big market movers make their move to draw price towards liquidity. Any questions, leave them in the comments. I'm going to be updating you guys on my profit goal. We made $1,500 across 3 accounts today. So we're at about $4,500 out of $30,000 for the month. So it's a very daunting goal, but it is only the second. So I'm feeling pretty freaking good. But see you next video, bitch.